Good afternoon, everyone. This is Christy with Van Ahn & Company. It's Monday, December 7th. It was a rough start to the markets for the week, and that's really across the board for both grain and meat markets. You had both corn and soybeans pretty much give back half their gains they've been working on over the last week or two. Soybeans being one that hit the hardest, down 23.5 on your front month contract. Corn down 8.5, and then wheat anywhere down from 1 to 6. And so what you had was unfavorable outside markets, which we did say outside markets are going to be the thing that moves the markets the most over the next month or two, just because there's not a whole lot of fundamental news out there for grains. And so you had unfriendly outside markets with crude down well over $2, the dollar up about 30 cents, and then the Dow was down 158 points. So you found that pressure there that really started into the soybean market, and everything else followed through. Noting on the soybean market, you do continue to see rains coming into South America, but you know, your extended forecast is still hot and dry for a majority of Brazil, and so if they continue to get the rains, that's going to be a different story. But I think you built that weather premium in there over the last week or two, thinking maybe that you might see it become hot and dry right now, and then you've just been favorable to those rains. And so because of that, it looks like everything's going to be all right for the time being. Like I said, extended forecast still is hot and dry though, so that's something to watch coming forward. Basis has been favorable for the grains, but I have heard it's starting to widen out with the recent rally and farmers selling. So one thing to note is that with this pullback, if basis doesn't improve, we might still want to look at a little bit of basis contracts moving forward, just to be cautious to see if it might widen out in the future. Over into the meat markets, you saw lower trade there. At one point, both live cattle, feeder cattle were limit lower. Your Dees contract is going to go off the board sometime soon, and so one thing to note is that it did not lock limit lower, and you saw that come off there, but you've had pretty close pressure for the last couple weeks. Hog market was brought down by both live cattle, feeder cattle. It was down well over $1.50. Like I said, those outside markets were unfavorable. Moving forward, it's really going to be those outside markets. You've seen the dollar fade off of that 100. It's in the 98 mark, and that's going to be really the dictator moving forward to see what these grains do. We have a crop report on Wednesday. Typically, the December crop report doesn't show a lot of news. They usually wait until January to change those numbers because January is final production numbers, so there shouldn't be anything too exciting out of that report, but nonetheless it is a crop report. I do have to close with a disclaimer: trading in futures and options involves risk and loss and may not be suitable for all producers. Have a great day.